Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1603A, and today's date is June 28th, 2018, and the title of the episode is The Money Supply Slows, Which Signals a Recession. Follow the Patterns. Let's get into the economic collapse financial news. Now, we are seeing certain areas around the world where they're embracing the blockchain technology, and these countries in different areas, they are passing laws and they're going full throttle into the blockchain technology. Now, if we look at Malta right now, it is becoming the blockchain powerhouse. They've just passed 3 new crypto bills. The 3 crypto bills have been passed by the Maltese parliament through their second reading. This further cements the tiny Mediterranean island's ambition to become the Bitcoin continent of Europe. And the announcement was made by the Parliamentary Secretary for Digital Innovation. And we can see that these bills are as follows. Now, the first one is the Virtual Financial Asset Act. This act deals with regulation of ICOs and states that projects funded via an ICO must publish white papers. The Malta Digital Innovation Authority Act. This act regards an industry-specific governing body that will be set up to protect and help manage businesses. The Innovative Technology Arrangements and Services Act. This bill concerns the regulation of designated innovative technology arrangements. Malta is already very popular, and it has already lured major exchanges, Binance, OKEX, to its shores, as both exchanges plan to relocate to the island within this year. These 2 are among the largest crypto trading platforms in the world, each processing daily more than 950 million in transactions. And Binance has already opened a bank account in the country and says its decision to relocate was to enable fiat to crypto deposits and withdrawals, something Malta is planning on implementing with the local bank partnerships. So we see there are certain countries that are going into this, and they are looking to embrace the blockchain technology. Now, Steve Wozniak was out there, and he is comparing the blockchain to the dot-com bubble. And I think he's right. There's a lot of cryptocurrencies out there, thousands of them right now, and most of them do absolutely nothing. And if you look back when the internet was first, evolving, we had all these companies come out promising that they were going to do all these different things, and most of them were junk. And I think the same thing is going to happen here, where we see the entire system get reworked when blockchain 2.0, 3.0 comes out, just like we have the internet today. It finds its footing and it, adapts to what we really need. Now, there's a lot of companies out there saying they're going to do a lot of different things, but I think what's going to happen, a lot of these different coins are going to disappear, and there's going to be the main coins that actually do something. Those will remain. Now, Steve Wozniak is one of the biggest Bitcoin bulls out there. He has recently stated that he hopes Bitcoin will become the world's global economy. Now, he actually agrees with Jack Dorsey, who is the founder of Twitter, who says that cryptocurrency is going to be the next currency. Now, once again, we can see there are certain people saying all different things about cryptocurrency. And if you want to know more about cryptocurrency, you want to learn about cryptocurrency, because I think just like the internet, this is going to evolve. And it's going to get better, it's going to be stronger, and more institutions, more companies, more countries are going to be looking at it. And I wouldn't be surprised if this actually becomes the digital currency of the world. All you need to do is go over to the X22 Report school.com site. Brings you to a website. You can read the website, read what it's all about. There's a school. There's also a trading room. If you're already experienced in cryptocurrency, you can go in and watch the traders trade, and you can learn from them. You can make those trades. It's an entertainment room, and you can see what they do in there, and everyone talks to each other within the trading room. Once again, it is the X22reportschool.com if you want to know more. Here in the United States, what are we seeing? Well, we're starting to see that the entire real estate market is slowly breaking down. Now, the Fed, we know, they are raising rates. They're unwinding at the same time. We saw this back in 2005, 6, and 7 when the Fed raised the rates. Things started to break apart. People realized that the rates were going up very, very quickly. Those people that had the adjustable rate mortgages, well, they just couldn't lock in and they just left their houses. This is what we saw in California. Well, the same thing's happening right now. Not as fast because rates are very, very low. They can't raise the rates like they did back in 2005, 6, and 7 because they just don't have the ability. They would just completely wipe out everything in a single shot. So they're doing it very, very slowly, so it's not noticeable. But when you really look at the housing market and you look at it very closely with a magnifying glass, you can see that it's completely breaking down. Just like we said in prior reports, existing home sales, pending home sales, we're seeing that the prices of homes, they are coming down. And we are seeing that mortgage applications, they have recorded their steepest weekly fall in over 4 months. Now, this is a huge drop. And why is this happening? Well, it's because interest rates are moving up, which knocks a lot of people out of the market. Now, the summer months are supposed to be incredible for real estate. This summer, not that great. We see that the first quarter GDP, well, it looks like we didn't get that 5% that they were predicting. It looks like now it's been revised many, many times came down from 5% all the way down to 3 to 2.5 to 2.3 to 2.2, and here we are at 2.0 right now. And again, most of the GDP number comes from spending. 70% is consumer spending. And what did they see? Well, they see that personal consumption, well, it was revised downward. It declined from an annualized bottom line contribution of 0.71%, and it dropped to 0.60%. So what we're looking at right now is that personal consumption, people going out there purchasing goods and things like that, it's just not happening. And it shows up in retail and everything else, and that's what we're seeing right now. And if we look at the track record of the Atlanta Fed in the first quarter, in February of this year, they told us that GDP was going to be around 5.376%. And then they revised each time, where in the end of March, they were down to about 3.5%. By April, they were down to 2.5%. And here we are, they're down to 2%. So they start out very, very high, and then reality sets in. And actually, this number is much, much lower. This is the manipulated number, where they're throwing everything in there to pretty much try to make it look a lot better than it really is. And this is the same calculation that they've been using since 2008, where they've been manipulating GDP, unemployment, and as time goes on, they manipulate a little bit more to make it look a lot better. And this is what they've been doing for a very long time. So really nothing has changed whatsoever. The CBO is warning that the U.S. debt will surpass the GDP by 2030. I think it's going to hit here much, much sooner if we continue on this track, because the debt level is increasing at an exponential rate, and it's unbelievable compared to the GDP numbers, which are completely fake, phony, and false anyhow. And the consumer spending aspect of it, that's going to fall very, very quickly. So I think they're going to be a little off on this number. I think it's going to happen a lot sooner, because a lot of what we're seeing around the economy right now is completely manipulated. We also see the money supply growth. It fell to a 3-month low in May this year, and it's continuing a downward slide, and we're also seeing global growth decline. Now, what's very interesting about the money supply is that we've seen this before, and each time we are in a recession, we have seen the M2 money supply decline. And if we look back in time, we can see it in 2008, we can see it in 2001, we can see it in 95, 96, we can see it going back in time. Here we are once again, where we're at the same level. And if we really look at it, in 2019, we're going to hit the level where it says we're in a recession. And we're seeing a lot of indicators right now letting us know that we are either in a recession right now or approaching a recession. Now, another indicator is commercial and industrial loans. They are declining. And every time we've seen this decline, guess what happens? We enter a recession. So when we start looking at all these economic indicators, they are showing us that we are entering or we are already in a recession. Now remember, a lot of what we're seeing is manipulated, which most likely means we are already in this recession and they're just covering it up. Actually, if we go back in time to 2008, we were in a recession prior to October. They just didn't let us know that until the market came down. And even then, they weren't really saying recession until later on. And this is what they always do. They go back in time and they recalculate everything and they tell you when it started. But of course, at that point, it's too late. Here we are today looking at all these indicators and we can see the patterns. That's why we're following these patterns. The patterns really don't change that much. Maybe a little bit here and there, but when you look back and you see all these patterns, they're pretty much exactly the same. The same thing with unemployment claims. Whenever we reach a very, very low point, guess what happens? We're in a recession. When we see the money supply drop down and decline like this, we're in a recession. When we see the Fed start to raise rates and we see the housing market break down, we see the credit market break down, we see commercial and industrial loans decline, we enter a recession. So all these indicators are pretty much showing us the exact same thing. And if we go back in time, they shown the same thing back in 2008. If we go back to 2001, they showed us the same exact thing there. If we go back in time, they continually show us the same exact thing. So we are following the patterns. The patterns hold true every single time. And it shows us that we are in a recession or we're approaching a recession, which means we're going to be heading into this collapse scenario because at this point, forget about the recession. We are headed for a collapse, a transition into a new system because each time we had the recession before, well, we didn't have this much debt. We didn't have other countries moving away from the dollar, selling the treasuries like they're doing. We didn't have this money printing that we're seeing today. We didn't have the Fed take $4.5 trillion and put it on its books. We didn't have different central banks around the world going to either zero or negative interest rates. We didn't see this in the last recessions because when 2008 hit, Congress allowed the central banks to really do whatever they needed to do to keep the system alive long enough for them to prepare for the collapse. And that's what is happening right now. They've been trying to prepare for this collapse. They were going to have this whole story with this would be their narrative of why this whole thing was coming down. They were going to play, a war, a country. Now they're stuck. They don't have this narrative anymore. And they're trying to figure out what they need to do to try to control this and blame this on another entity, most likely the Trump administration. This is where they've been leading up to. And we know that the stress test with the banks, we know that most of the banks in Europe and in the U.S., they're insolvent. And we know that the stress tests were there to give us some type of insurance that everything was okay. But we realize by looking at all this data and all this information, the economy is doomed at this point. There's so much manipulation. There's so much covert money going all different places. Some people call it dark money. And we know that this system cannot stay alive much longer. And from every single indicator that we've been looking at, it shows that we are headed to the collapse scenario. So you better get prepared and ready for this. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.